All right, now the markets were down heavy today. The Dow down almost 500 points. The NASDAQ down 2%. And I'm going to be honest, I think this may be the top of the market. Now, in many previous videos, I had stated that they were going to run this market up until the election, but I've since changed my mind. And I think they're going to take this market down, up to the election. And I'll make a video this weekend on why I think that is, and the reason why it's going to be politics involved. Now, at any rate, we had some earnings after the bell, and it's going to be a setup probably for a down day tomorrow. Now, we're going to have the monthly jobs report tomorrow, and they could change things. But right now, tomorrow looks like it's going to be down. Now, some of those big tech stocks, they got wrecked today, and CrowdStrike is one of them. This stock was down more than 3% today, and it's been down, I believe, almost every day since they had that software glitch. And right now, we're down nearly 50% since that incident. Tesla, another stock, down 6.5%. And many of these tech stocks, they're giving back those gains that they've made early in the year. And there's a chance that these stocks could go down even more. Now, after the bell, we had some earnings. Intel, down 18% after hours. Snap, down 23% after hours. Amazon, weaker than expected sales. That stock is down more than 5% after hours. So a lot of these stocks are going down, a continuation of how they fared earlier. And as I've said, the stock market and the muted price of oil are the only things that the media and Wall Street talking heads have been able to point to and say that this economy is rosy. And right now it looks like it's going to be a rug pull on the market. So they're not going to have much to glee over. Now, we had the weekly unemployment claims come out this morning, and they're up to their highest in almost 1 year. And that number came in at 249,000. And that's an increase of 14,000 over last week. Now, the continuing claims, they increased by about 33,000 to 1.88 million. And that's the amount of people who are continually getting a claim, getting a check. And as I've said, these numbers are going to go higher. And in my opinion, these numbers are going over 300,000 before the end of the year. And the amount of people who are getting laid off, who are getting notices, that number continues to tick up, at least from what I'm seeing. Now, all this year, we've had an increase of people withdrawing for their 401ks. And that has happened while the stock market has risen. And you're going to really see a flurry of people withdrawing their money once this market begins to drop. Everyone and their mama is going to be withdrawn from their 401k. And we're going to see spending fall off a cliff as this market falls, because most of the people who've had discretionary spending, they've been the guys that have been raking in money from their stocks, from their portfolios, reaching all-time highs. And once these portfolios start turning down, you're going to see that spending come to a halt. And we're going to see retail sales fall off a cliff. And you're going to see a lot of these company earnings, they're going to turn down. Now, just in the past few weeks, we've had many companies announce that they're increasing their dividends. And it's almost as if they knew that this market was going to drop. They were able to get approval by the board of directors to increase these dividends while the stocks were hot. They wouldn't get the same reaction if the stocks were dropping. So the timing of these dividend rises makes me think that we're near the top, and this market's probably going to go a lot lower. Now, we had the ISM Manufacturing Index report come out, and that dropped to an 8-month low. And that's going to continue, folks. We've seen the Chicago PMI, the Kansas City PMI, the New York Empire Manufacturing Index. We've seen many of these manufacturing index reports fall over the past few weeks and months. And the big takeaway is manufacturing in the U.S. is in decline. And now we're going to be going into the fall and winter months where manufacturing usually slows. And these numbers, they're only going to get worse. Now, one of the big takeaways from this report was new orders, they fell. And that's a trend we've been seeing in many of the area manufacturing reports. So everywhere you look, everywhere you turn, it's negative data coming out. Now, we had the chocolate maker Hershey's report their earnings this morning, and sales absolutely cratered. And the CEO, he gave a stern warning that consumers, they're pulling back. They don't have the discretionary spending that they once did. And we're seeing this from across many companies: Coca-Cola, Pepsi, Kraft Heinz the other day, and now Hershey's. And as I've said, the American public is becoming poorer. And that's only going to get worse, folks, as this stock market falls. Or if this stock market falls, and I believe it will, things are going to go from bad to extremely worse in a New York second. The evictions continue to go up. The car repos continue to go up. More people are getting behind on their credit card bills. And I could go on and on. But once you add all this stuff up, you can see over the horizon the debacle, the economic calamity that this nation is going to be in. Now, on to commodities. We had gold touch $2,500 an ounce overnight, and that's a brand new all-time high. Now, we had silver pretty much remain flat, and we had oil and some of the agricultural commodities down slightly today. Now, tomorrow we got the big jobs number. I think there's a good likelihood that it's going to be another big red day in the market. This quick stock market commentary, please like and subscribe.